Good afternoon. Welcome to the International Investors Mortgage webinar. We're welcoming today a great group of panel experts to our webinar today and talk a little bit about International Investor Mortgage's newest product, the EB-5 loan. My name is Greg Sweeney, and I'll be your moderator for the event today. I encourage all of you, if you have questions, at the bottom of your screen, you will see a icon for Q&A, and we can capture those questions and have a great dialogue at the end of the presentation. We've assembled a great group of people to cover what we know to be the basics, as well as some of the granular side of an EB-5 backed loan. So let me introduce you to the panel today, and they can take a moment to share a little bit about themselves and kind of their activity in the world of EB-5. The first group is from JTC. It's Reed Thomas and Jill Jones. Reed, if you take a moment to tell a little bit about you and your activity in EB-5.
Sure. Thanks, Greg. Excited to be here. Thank you, everybody, for attending. JTC Americas, most of you on this call probably know us formerly as NES Financial. So our role in EB-5 was really to provide administrative services that help provide additional security, transparency, and compliance to all the different stakeholders. So we started out in the business doing escrow-related services, and that was an important precursor for what we're doing here with the team at International Investors Mortgage.
Great, thanks, Reed. Jill, if you take a moment to talk a little bit about your job at JTC.
Sure, thanks, Greg. My name is Jill Jones, and I'm General Counsel for JTC Americas. I've been working with Reed in the EB-5 sector since late 2009. And as he mentioned, we started as an escrow provider and evolved into more of a full service, fund administrator. But all along, our focus has been on best practices and helping the program do the good that it's supposed to do. And part of doing the good it's supposed to do is helping immigrants come to the United States and have a successful kickoff. And to do that, a lot of people need mortgages. So we're pleased to be part of the presentation here to help people understand what's available, how to make it easier.
Great, thanks, Jill. I appreciate that. Also representing Clasco Law, we have Jessica Denisi. Jessica, take a few minutes to talk a little bit about Clasco and yourself and your involvement with this particular webinar.
Yeah, so my name is Jessica. I'm an attorney at Clasco Immigration Law Partners. We're a boutique immigration firm. We handle both general corporate immigration on the business side and also investment immigration, particularly EB-5. I am a member of our EB-5 team. We have a team of attorneys that's dedicated to just helping investors structure investments that are EB-5 compliant and also to document their source and path of funds properly. We have also a team that is dedicated to EB-5 compliance, making sure that investors follow the rules as they're going along so that they're able to get a permanent green card at the end of the journey.
That's true. Well, we always like to follow the rules. I know that, so that's good to hear. And finally, the last part of the panel, representing International Investors Mortgage, we have Suresh Rajan and Dinesh Goel. Suresh, why don't you take a minute to just introduce yourself and your activity at IIM.
So thank you, Greg. Appreciate it. Good to be here with everybody on the panel and joining on the webinar today. My name is Suresh Rajan. I'm a board member with International Investors Mortgage. In a previous life, I'm also the founder and executive chairman of LCR Capital Partners, which is where we started getting to know the EB-5 industry. We entered the EB-5 industry in 2015, and since then have been in about 30 countries, and I think that's exposed us to a lot of the needs, financial needs of investors around the world as they look to come into the United States. And International Investors Mortgage is a solution that I think brings a lot of the right people together to address those needs of immigrant investors coming over.
Perfect, thank you. Dinesh, take a moment to tell us about your activity within IIM, please.
Thank you, Greg. So I've been a part of the EB-5 industry as a part of LCR Capital Partners formerly, and currently I'm also a part of International Investors Mortgage. where our main focus is to be able to work with foreign nationals and international investors, get access to high quality credit opportunities and credit loans, be it for property or other purposes. And some bit of it what we'll cover today, especially for our main focus has been EB-5 investors so far, and we've had phenomenal success with introducing the concept.
Terrific, thank you, Dinesh. So given that both Dinesh and Suresh, you have a lot of direct knowledge, and this question, the first question is for you, Suresh. You had mentioned that you had opportunities to engage with clients in over 30 countries. So you've spent a lot of time really understanding a lot of the different aspects of people moving to the United States, going through the EB-5 program. What have you seen as some, the challenges that those individual investors have seen in kind of their transition to the US and really tapping into and finding ways to have the financial markets work for them?
Sure. Very, very complex issue for families around the world, because every country is a little bit different and the needs of every family are a bit different. Certainly, there's a number of things that I think are commonalities across them. I would focus on two in particular that are finance based. One would be just their understanding of the banking system, the financial system overall in the United States. Having access to it. There was a study done by FDIC a few years ago that indicated that immigrant households that only speak the foreign language, one foreign language, are 5 times less likely to have a banking relationship. And something as simple as that prevents individuals from easily doing things like paying a utility bill. It becomes a situation where you have to be, in person making a cash payment, or you're purchasing a money order, whereas those that aren't described that way are doing it automatically through auto payments or Venmo or et cetera. So a simple thing like that can be quite challenging. It also leads to the issue around building a credit history. Again, we have clients that have wealth but no income. We have clients that have wealth and income but don't have credit histories. We've got clients that have wealth, income, and credit histories, but credit histories that don't port over to the United States. And not really understanding how those are built and the implications of not having that on getting a mortgage or even an apartment lease, even a cell phone can be a surprise for folks as they get here. So things that we would take for very much granted can be significant challenges for families as they get here.
Great. And given that they do have those challenges here in the United States, as a follow-up question, Suresh, how do they deal with some of their own home country as they try to transition their wealth out of the countries they're coming from, and what are those barriers that we've seen in the past?
Sure. Again, it's very much country dependent. One country that we've built a lot of knowledge around is India, which obviously has a strong, long immigration connection with the United States. But the ability to send money out of India, the LRS constraints, are significant. They're capped every year at $250,000 per individual. That number can swing year to year. And it's not just about getting the money out of India, but it's how you're getting it out, from a source of funds, path and origin. The KYC, AML issues are not insignificant. And so we do want our client families to move forward with that effort in a way that doesn't encumber those assets when they get here if they're not associated with the right paperwork going into the right institutions. So that's very descriptive of something that's happening in India. Other countries, it might be an inflation issue, a devaluation issue. In South Africa, there's taxes on capital that are exiting the country, and that can swing wildly from year to year. So again, by country, I think any of us that are looking to serve the interest of global families, we need to have an appreciation of what they might be facing that that they're just not accustomed to considering as they move forward to migrate to the U.S. or frankly any other country.
Perfect. Thank you. So I assume that the conclusion of that really is having availability to USD as you transition is extremely important to that transition.
Makes everything a lot easier.
What I'll do is I'll start kind of to get this really kicked off on how the product comes about and some of the things we're facing. Some of the things I've seen is that, when you spoke of credit history is a key thing, or lack thereof of a credit history is important. Understanding how to access the US system, financial system is important as well. But most of these things are kind of overarching things to just people trying to assimilate and try to get to the home comforts that they had from the country that they were exiting. So, and many times that comes down to just having a home, where you're going to live, right? So, so I'll start, shift over to you, Dinesh. You spend a lot of time with EB-5 clients, and you kind of know their joys as well as their fears and their anxieties as well. What have you seen in things as simple as getting credit cards to as complex as really getting a mortgage here as they transition to the US?
Yeah, thanks, Greg. Just kind of build on what Suresh said. Right? I think there's a gap between a foreign national's understanding of how the US financial system really works vis-a-vis how it really works. And I think a lot of it has to do with the way the processes are, how evolved the US economy and the US systems are, and so how financial institutions process information, process incoming clients, right? Technically, they're not really geared up or formed in a manner where foreign nationals with zero credit history or past background have access to great high quality credit, be it for credit cards, be it for student loans, be it for mortgages, be it for car loans, even buying insurance, and something as simple as getting a cell phone. I mean, back a couple of decades ago, when I first came to the United States, I had zero credit history, right? And so the system continues to be the same, where the day you land, you want to get a cell phone, you now have burner phones, but back in the day, or even now, if you want a regular phone, you have a big down payment or big just deposit that you got to make to be able to access these loans. So what we've seen in our experience is that it's a mystery for a lot of international and clients and for foreign nationals coming into the United States. And it's not just true for EB-5 clients, but also for all kinds of foreign nationals if they're coming on any kind of student visa or a work visa or any other visa. Interestingly, a lot of our conversations in the last few years, while we were thinking of this product and developing what we've now achieved with International Investors Mortgage, the one question that we got very commonly was, okay, what happens once I land in the United States? How do I access and how do I start building my life? Now, think about it from, everybody on this panel and our guests understand that technically anybody who's applying for an EB-5 green card, making an EB-5 application or trying to get a green card is trying to transition life to the United States. And having spent a significant amount of time in their home countries vis-a-vis trying to transition to the United States can be very complex, especially in the financial world. So there's a lot of ambiguity, and that kind of drives the fear for most of our clients. In terms of joys, just a couple of small things, when we help our clients get something as simple as a credit card or tell them, point them in the right direction, or for that matter of fact, have them access high quality credit loans or property loans, it's just phenomenal to see how they respond and react to that. So it's just, really about adding value to our clients' lives.
Perfect. Thanks, Dinesh. It appears, that from what I've heard, whether it's loans for cars, life insurance, there's a lot of things out there that those in transition in EB-5 will become important in their lives going forward. And I think we all know that you don't get there with a lot of great partners to make those kinds of things happen and provide those products and services. So if I can shift here, Reed, I know JTC Americas, which is formerly NES, as you had mentioned, has been one of the most visible solution providers in EB-5 today. How do you see specifically from an administrative services position, how do you see that comfort level for clients in the U.S. financial markets from your administrative perch?
Thanks, Greg. Yeah, there's multiple dimensions to that. The first is, I think, at this time, it's important for stakeholders in EB-5 in the EB-5 world to be really looking at the relationships they have with their clients, investors in this case, and trying to figure out how to add value to their lives. Right? The business model has to be changing when we can't go out and raise capital because the regional center program is shut down. So I think it's prudent on all of us in the industry to really think about, well, where else can we add value? We have these trusted relationships with these investors, and so what can we do? And banking, to your question specifically, is one of those areas, I agree with Suresh, that's been a big challenge. I mean, you think back to EB-5 when it started, we couldn't get a bank to take an EB-5 escrow deposit. Of the 6,000 banks in the country, even today, there might be 6 that'll take a deposit for EB-5, right? So, we at NES, now JTC, we think we've sort of cracked the code on the banking aspects of it, because our approach has really been to focus on protecting the investor, providing transparency to the investor all the way through the investment life cycle. So as a result, we've become a brand that's trusted by the investors to help make sure the money is moved correctly and securely. At the same time, we're a brand that's trusted by the financial institutions to help deal with all the complexities of foreign capital as they come in. So it's logical for us as part of your offering to provide escrow services that make sure that the funds are handled in the way they're supposed to be and continue to provide comfort and transparency to the investor community.
And what have you found in creating the escrow services that provide value to the client, and how has that enhanced your business for other ideas in supporting the EB-5 market as well?
Well, so our approach is really that we have the ability to configure our solution approach for the specific needs. What's new here is that we now can become the escrow agent ourselves. We historically were not able to do that, which made it a little more complex for our clients because there were more parties involved in structuring these agreements. But now it's just our team directly, led by Jill. We can put these deals together quickly, and so that's been a big help to our business.
Terrific, thanks, Reed. That's very helpful. Right now, I'd like to kind of shift the conversation a little bit and focus really on the product itself, the EB-5 backed loans, as it relates to mortgages. Back to you, Dinesh. What exactly is the EB-5 loan being offered from International Investors Mortgage?
Yeah, thanks, Greg. So taking a step back into the whole concept of it, as you can imagine, in the EB-5 industry, the capital that an EB-5 investor or an applicant is investing into a project is locked in for a long period of time. For most non-China investors, it could be anywhere between 5 to 7 years. For Chinese investors, we know that to be maybe a decade or even longer, for that matter of fact. And these investors are trusting their capital and deploying it to a specific project, but with not significant returns. Now, in the meantime, that could be a significant portion of wealth or not, but a significantly large number for families to have deployed in the United States. In the meantime, as they transition to the United States, they don't have access to capital. So what we've been able to do, along with great counsel from Jessica, who's on the panel here with us today, and with Reed and Jill, we've been able to design a product where we can take the EB-5 LP interest and put a lien on it in a manner which is compliant and does not hamper or add any risk to their immigration from the EB-5 perspective and be able to provide them capital against that. Now, what we've been able to do is partner with lenders who are able to provide up to 50% of the capital invested in EB-5. So a minimum of $100,000 to a maximum of 50%. So anybody who invested $500,000 can get up to $250,000. Clients who come in and invested $900,000 can get up to $450,000 as capital to use for a period of maximum 5 years. Now, these loans are structured in a manner where they're interest only. So you're only paying interest for the duration that you're using the loan. And at the end of that period, or even before that, if you have capital flowing in either from return of the project, return of capital from the project, or from other sources, you can repay that loan in principle, and we release the lien on the EB-5 or the leverage on the EB-5 LP interest. So fairly simple that way and fairly compliant.
And so that's very informative. I think one of the things that people are probably asking themselves right now is who's eligible for this loan? Is it complicated? How long does it take? Those are the things that I think most people are probably saying, well, this sounds like a great product, but how complicated is this whole process?
Yeah, great question, Greg. The process is not really complex. It's just a very defined process. When an EB-5 applicant receives their 5 to 6 approval, they become eligible to receive or access this EB-5 leveraged loan. The reason we've kept it as currently as 5 to 6 approval or post 5 to 6 approval for clients is because most EB-5 projects and most EB-5 PPMs will have clauses where the project or the regional center or the fund manager has to return the capital back to the investor in case there is a denial, right? So knowing that a 5 to 6 has been approved, we know that the capital is going to stay invested with the regional center, with the developer, and with the project or the general partner for a long period of time. So we know that that capital is going to be in the United States. Now, the way the process works is fairly simple. When clients approach us saying, hey, I'm interested in knowing more, we obviously have a conversation with them. We gather a bunch of information, including the project related information as to where the investment is. So we need to know who's their regional center, who's their developer, what is the collateral that the project is offering, whether the project is on point to create the jobs. Have they received other 5 to 6 approvals? Is it an exemplar approved project? Has the project been on time to pay their interest and coupons on time? Have any other investors received their EB-5 capital back? So just really getting into the weeds with the project related information so that we know that we can give our lending partners the comfort that these projects and these investors are worth backing and eligible as per our format to receive such loans. Now that's generally the first step, is gathering information and having these conversations, trying to understand what they're going to use the loan for, and then processing that information and then making an offer to the client. So pretty standard terms and conditions, like I mentioned in the previous question, 5-year loan terms, interest only payments. What we're asking for as collateral is the EB-5 LP interest, and we're leveraging that along with a personal guarantee. So just in case there's a default by the return, by the project or the regional center on return of capital, our collateral is still secured by personal guarantee. So that's the other part of it, and getting all of that documentation together. Now, what we've been able to do so far is we've been able to pre-approve certain projects and work with clients in some of those projects, and those get processed out within anywhere between 3 to 7 days. But generally, we would imagine that any new project that we haven't seen so far we could probably get that done in 14 days. So from a timeline perspective, it's fairly easy and simple. At the end of the day, I think what's most important for clients to understand and know is that we do need a lot of information about their EB-5 investment. After all, that is the collateral for the lender. And so as much information as you can gather or have ready, that makes our job easier and the process that much more simpler to follow.
Given the lot of information you just provided, Dinesh, it sounds like you've done a loan before. Could you give us an example of how someone utilized the EB-5 investment in a specific case?
Sure. I'll use a couple of case studies, but generally, as an overarching comment, the EB-5 leveraged loan works more like a personal loan or a hard money loan, as we know it in the United States. They can, investors who are accessing these loans can use it for property purchase. They can use it for making a down payment for the property purchase if they're getting a secondary loan or another loan or a first mortgage on the property. They can use it for paying tuition fees. They can use it for buying insurance policy. They can use it to make investments. Generally, we don't have too many restrictions on what they can use it for. And so almost every purpose is allowed, as long as we hope you're not gambling it away. So, but at the end of the day, the phenomenal success we've had, and I'll quote a couple of case studies here, and we also have some of them on our website, have been phenomenal learning experiences, not just for us, but also for our team and our clients as well. There's this one client who recently graduated from university, 22-year-old kid, the principal applicant on an EB-5 application, had zero credit history because he didn't have any past internships or jobs, and so had a low credit score and a recent credit history as well, and wanted to purchase approximately a $330,000 townhouse in Texas. And what we were able to do is provide him with a $250,000 loan, which is backed by the EB-5 and the personal guarantee as well. And the family only had to add another $75,000 to be able to buy the property. Now, the interesting part is, from their perspective, the property itself is free and clear because the $250,000, the large chunk of the capital, came from the EB-5 back, and hence the LP interest and the personal guarantee is what counts. So now the house that this child owns is free and clear, right? And the good part of some bit of what we do, and we'll talk about a little more about this in the latter half of this conversation, is that we actually had a UCC filing made, and we do that with all our loans, is because that then reflects on the credit history. So while the child didn't have a credit history, they're now building a credit history with this loan, but it's more like a personal hard money loan, which is an EB-5 leveraged investment leveraged loan, right? So that's one case study that we are really proud of sharing across. Another case study that I can share is of a family from Mexico, where they'd been in the United States for a while, have access to good credit generally because of existing visas and otherwise. But on a recent purchase that they were making for a certain commercial property, was short on certain cash. And so they approached us saying, hey, listen, we have an EB-5 investment made. Would you be willing to use that as leverage to provide us capital? And sure enough, we looked at the paperwork, we processed it, and within 10 days, we were able to provide them $200,000 in capital, which they then used as down payment to purchase that commercial property and process it with their main banker. So those are some of the really interesting case studies that I can quote. I mean, there's obviously more, and we're happy to share some of those as in how we believe that we've got enough client clearance to share those openly. But it's just been a phenomenal experience trying to understand and see how families and foreign nationals are accessing these loans that we're providing.
Terrific. And Dinesh, several times during what you were just presenting, you mentioned paperwork. So I'm going to shift a question to Jill at JTC. Jill, given that you always want to have transparency, You want to make sure that the provider of capital for the loans has transparency. You want to make sure that the EB-5 investor has transparency to all this stuff, plus the paperwork that goes along with it. Can you talk a little bit about how your leadership in creating the escrow portion of this platform, how you came to that conclusion of how to get there, and some of the things that will provide in the transparency and compliance side of an escrow agent?
Sure, I think that's a great idea. So, the first most important thing that came into our design of this escrow was that it needed to accommodate multiple investors, multiple projects. And so we realized quickly that each lender is going to be offering this product to EB-5 investors. So we decided there would need to be one escrow agreement or one escrow account for each lender. And under that account would be an opportunity for the storage of all of the paperwork. Dinesh and Suresh talked about KYC and AML, and they talked about underwriting for the lender. That's a lot of paperwork coming from overseas a lot of times. And so having a portal that's attached to the escrow account where you can store all of those documents and have them segregated by investor is really quite important. It gives an easy way to see what has been collected so far, what might be outstanding, and it allows the lender then a quick place to go and look and check the boxes and get through that underwriting process, so you can stay to the 7 to 14 day kind of time period on getting approved for the loan. It's also really important to be able to track the progress of the loan. Now, in this loan, we're looking at 5 to 7 years where we're making interest-only payments. So there's not a whole lot of activity, but there is still a balance of a loan, and there's a tracking of interest payments being made. At any point during that time, if there were to be a default or an extra payment for that matter, let's not always think on the negative side. That's got to be tracked and it's got to be recorded. So at the end of the loan period, when the balance is due, things can be reconciled quickly and easily. Now, in between, at some point, ideally, the EB-5 project is going to have a return. And if it's at a return in a point of time where the investor is entitled to hold the money, assuming we don't have a redeployment situation, then the money can sit there. And if there is a default, then the money is available so the lender feels comfortable, he could be made whole and the default be corrected. And also a comfort to the investor that, he will have visibility of that money. No one could go take it without his knowledge. And he would see exactly dollar for dollar what was paid out, where it went, and make sure that he is fully on board with where everything stands at any point in time. Given they may be in the United States in multiple different time zones, he may be in another country in other time zones, having access to that real time becomes more valuable than ever before.
And did you see this as being a huge leap, or right in the wheelhouse of what JTC has always done, and just an extension of the great services you provide before?
I love how you teed that up for me, Greg. It's exactly what we do at JTC. So as Reed mentioned, we started as an escrow provider. We grew that business into fund administration and escrow administration. We then followed the needs of our clients to realize there's a need on capital returns. And so this is really a natural progression of these are the needs of the group of people we set out to help. And again, making the program be as good as it's supposed to be, the transparency and the security of it all really needs to start from day one and end when this person has a permanent green card and they've got their home and they're really set up to live in the United States as they had hoped to.
That's terrific. Well, Dinesh and Jill, thank you for, kind of unbundling, how this product works, how it's tracked, how people have a comfort level, how there's transparency. But one of the other things I think we want to explore for those on the call today is really, how do you integrate this whole loan process into the EB-5 process and their transition in the journey of as an EB-5 investor? So if I can go to Jessica now. Jessica, these loans seem like a great option, and they're in USD dollar assets that are in a stranded investment. From a compliance perspective, can you help us understand the structure and the application that was used in making sure that this is the right way to approach this particular product?
Yeah, there were a few things that we looked at that we thought were important. I think the first, kind of banner conclusion is that there really isn't a reason why this should fall under the jurisdiction of USCIS to begin with. We're talking about a transaction contemplated between the lender and whoever's getting the loan. It occurs outside of the EB-5 process. It's a private contract with a third-party entity. It doesn't involve the NCE or the job-creating enterprise. There's no affiliation with any of the EB-5 entities. I think a couple of other things that we looked at that we thought were potential issues was, whether or not the investment would still be seen to be sustained by USCIS and whether or not it would be at risk. And on both those points, we also think that the product is compliant. Obviously, the EB-5 investment cannot be, taken or foreclosed upon until the investor has concluded the sustainment period. And at that point, the investor could get the money back or, do with it as the investor pleases. And the other, I think important fact was whether or not it was at risk. And here, the risk still remains entirely with the investor, and it's still tied to whether or not, the project is successful. So we felt comfortable with the way this is structured.
So based on that, then one of the other issues in the EB-5 world was, about redemption. And there were some questionable kinds of things. And you'd mentioned there's not a connection. It's a third-party capital provider and all of that. Is there anything else that you want to add as it relates to specifically that this is not a redemption or?
Sure. I think a lot of that ties into the Azumi case, and in that particular situation, it was viewed to be a redemption because it was an agreement with the NCE to buy back the interest at a fixed time and at a fixed price. And obviously that's not the case here. This is a third-party contract. It's tied to the success of the investment. We don't know what the amount will be. So we didn't find that there was an issue as to redemption either.
Terrific. Thank you, Jessica. I appreciate that. That helps clarify a lot around this product and meeting all the criteria for being a sound offering. So we now have a client that has a need. We have a company that has a solution. We have standards for compliance, and it's not around a redemption. So let's understand some of the mechanics around it. So Reed, as as a follow-up question, how can this new business scale to meet some of the needs of what we're doing with regional, reaching out to immigration attorneys, regional centers, and the like?
Well, clearly, this is something that I think both regional centers and immigration lawyers would be wise to introduce to their investors as something that's available to them through the process. So I think from you call it a distribution perspective, I think it's something that investors would benefit from knowing about and determining whether this is something that would be helpful to them or not. From an implementation perspective, what we've done, and Jill can talk more about this, is really streamline the administrative aspects to this, so that from an admin perspective, in terms of controlling how the deposits move, the sort of the return of capital, make sure it's in escrow quickly, we use the same technology that we've done before to really scale this at volume.
Great. And Jill, this particular structure also provides that extra layer of protection because you do KYC AML checks for all of these funds that would be coming in through the escrow. Is correct?
That's right. So one of the challenges that banks have always had with EB-5 is being able to hold money that belongs to a person they don't have a relationship with. And so KYC and AML is something that is put upon them by their regulators. They must, KYC stands for know your customer. They must know their customers. And how do they do that? if they can't see this person, shake their hand and check their ID. And so there are a number of documents that are kind of bare minimum required, a passport, a W-8 BEN or a W-9 if they already have a social security number. Those are bare minimums. But beyond that, some people want to see, okay, compare what's on the passport to a driver's license or a foreign issued ID and make sure that this is the same person. And they're really doing their due diligence to be able to satisfy the regulators and to, be able to offer the services and the products that they're hoping to offer. The worst case scenario would be for a regulator to audit a bank and say, where did all this money come from? Who are these people? And to then have to pay fines or have consequences that then prevented them from continuing to offer these great products. And so what we've done with the banks that we work with, starting all the way back from escrow to now doing these types of mortgage escrows, is we've worked with the bank's compliance groups and legal departments to understand what is it that you're going to need to satisfy the regulators and how can we help you collect that? Because we would have more access to the people that could source the documents and to be able to bring them in an efficient manner and to present them in a way that they can be reviewed. Don't forget, a lot of times these documents would be in a foreign language. So giving a bank officer a document in Chinese when he's got no knowledge of how to translate that doesn't really help them solve the problem.
Terrific, thank you. So it appears we've covered the product, we've covered the process, the paperwork, and the partners to make this particular business and offering happen. Let's discuss some of the things that are important to the individual investor. What kind of advantages are there to the EB-5 investor? So Dinesh, I'll turn that over to you. As it relates to just having access to this, what kind of benefits do you see in all with this opportunity to access credit and loans through their EB-5?
Yeah, great question, Greg. I think, I kind of want to underline two very important aspects of how this would benefit EB-5 clients. One is just access to capital, right? I mean, their EB-5 capital is locked for a really long time, as we discussed, 5 to 7 years in case of non-Chinese investors and probably a decade or more for China-based investors. This product really helps them unlock some bit of that value to use for things that might be more meaningful to them from just, rather than bringing cash from their home countries. So it's one piece is that. The second piece is really being able to build a credit history. And just to kind of build on that is, like we talked about in terms of clients, they come to the United States with absolutely zero understanding of how the US financial systems work and how stressed they get when they're trying to deal and frustrated they get when they're trying to deal with access to credit, be it as simple as getting a credit card to some of the other options, right? And what this does is help them build credit history as well, is because we make UCC filings of each of our loans, that's why it's adding on to their credit history. And so 1, 2, 3 years from now, they can actually very easily either refinance those loans because they then have built credit history, right? At the early stages, no financial institutions or barely any would be able to give them access to credit or give them access to financing. As they start using these loans and they've had it for a year, 2 years, 3 years, they have a substantial amount of credit history of, let's say, 50% of up to 50% of their EB-5 investment, which is $250,000 or $450,000 or any number in between. They have a substantial amount of credit history built, which then gives them multiple options and the financial institutions the ability to pull those credit histories to give them more options. So overall, it has, like I said, two advantages. One is immediate access to cash, and especially when you factor in some bit of what Suresh was talking about and some bit of what Jill was talking about, is the ability to bring capital from their home countries, the foreign exchange risk, the foreign exchange controls, the taxation on bringing those monies from overseas, all of that factored in, this seems like a great option for EB-5 clients.
Terrific, thanks, Dinesh. And so to kind of bring it full circle, when you have a great team here that put together a great product and a lot of things, how do you see, this can be a question for either Suresh, or probably better for you, Dinesh. How do you see it as referring with immigration attorneys, with regional centers that, quality regional centers? How do you see the relationship, and what benefit does it bring them as well?
Yeah, I think it's again, a very simple thought process, Greg. Look, the product that we've designed is for all EB-5 investors. We actually started off thinking about it for one or two specific projects and one or two specific regional centers. But as we started talking to more and more people in the industry, we realized that this can be a regional center and a project agnostic offering for the EB-5 industry itself that could be extremely valuable to a lot more clients than just limited to one or two regional centers. As it relates to how it benefits immigration attorneys and other regional centers, first of all, I want to take a minute to thank this panel first, because this panel is really what brought the product together. I mean, what you see on the screen here is really people who built this product. I mean, starting with our first conversation with Jessica a couple of years ago, to then bringing Reed and Jill into the fold and having conversations with them and trying to understand how this would all pull in together in a compliant manner. There's a lot of gratitude at our end to just share with everyone on the panel. So having said that, when you look at the product itself, and we say that it's agnostic to regional centers and projects, as long as there's clients out there who need access to capital, I think this is something that all regional centers and immigration attorneys can offer to their EB-5 clients. So the ask is actually fairly simple: is think about it and talk to your clients about it, and we'd be more than happy to get on either direct calls with you or your clients, address all the questions, make sure that you have full transparency. I think we've had a couple of immigration attorneys reach out to us in the recent past and say, listen, I'd like to review the documents, the loan documents that you're going to sign on, that my client's going to sign on, before I advise them on it. And we've been working in a fully transparent manner where we're sharing with them transparently the template of the documents that their clients sign onto, right? And I think that works out extremely well, because we're not, at the end of the day, our common goal as a team here and as a goal for the panel is to really add value to our clients' lives in a manner where they're getting access to great quality credit for usage for multiple purposes, be it for property purchase, be it for tuition fees, be it for insurance purchase, be it for investment needs, be it for anything. So as long as we're able to offer that, I think it works out extremely well for clients, and hence, as immigration attorneys who are a part of this ecosystem and the regional centers who are a part of this ecosystem together with us, it makes great sense to offer this and extend this to their clients, and at least let them know about it. And also talk to your other regions. A lot of immigration attorneys advise regional centers and general partners of funds. Talk to them about it actively, right? And all we're asking for is just an introduction to one of the panel members, and then we can take it from there.
Terrific, thanks, Dinesh. Now that's the end of the structured part of the program. We want to shift now to the Q&A portion, and we have some great questions from those that are attending the webinar. The first one talks about, can you explain talk about the cost of a loan versus the cost of moving currency to the US?
Yeah, again, a great question, and thank you for asking that question. I'll use an example here, and the most common example that we've used so far is India, and Suresh referred to India as one of the countries where we have a lot of experience with. And again, second largest EB-5 market after China. So let's use that as an example, and then same thing, extrapolate that on China. Look, foreign exchange currency controls exist in China and in India, the two largest markets in the world. In China, you've got a $50,000 cap per individual to move money outside the country. In India, it's $250,000. There's foreign exchange currency costs. There's also a 5% tax that you have to pay upfront for every dollar that you're moving out. So let's say someone were moving out $200,000 from a country like India, they'd have to pay $10,000 to the bank at source, which they can claim later. But at the end of the day, it's still upfront cost coming of moving the capital from India to the United States, right? And so this works out extremely well because here, all you're incurring as an upfront cost is an origination fee, a legal fee of drafting of documentation, and the third is the UCC filing fee, right? And so in comparison, it's a lot lesser than the cost that you would incur in loss of foreign exchange, in conversion, and at the same time the tax collected and the stress of just having to move that capital out of the home country. So in comparison, this works out extremely well for most of the EB-5 industry and clients.
Great, thank you, Dinesh. The second question that we have come in is, I heard the EB-5 loan can be used for down payment, but can it be also part of the property mortgage as well? So can they become one, or are they separate in the process?
Sure. I mean, it can be used for either of those purposes. I mean, like we talked about earlier in this conversation, the money that you're getting access to, the capital that you're getting access to, can be up to 50% of your EB-5 investment value. Now, you can use it for any purpose, be it for down payment or for property mortgage itself. And I'll give you I used an example of this kid who we talked about, who bought a property in Texas. Is the family actually essentially paid $75,000, and the rest $250,000 came from us as the property purchase mortgage itself. Now, the only difference between a property mortgage and an EB-5 investment leverage loan is simply that as a property mortgage, we would have to have a lien on the property itself. In the EB-5 investment leverage loan, what we're doing is we're leveraging the EB-5 investments, or we're collateralizing the LP interest in the return of capital from there and the personal guarantee. So yes, it can be used for any of those purposes, be it for the down payment piece or for the larger piece of the property purchase as well. It has no restrictions. However, the technical difference, like I said, is if you use it as property mortgage or define it as property mortgage, then you have to have a lien on the property. Here, we're not technically taking a lien on the property itself. Now, as international investors mortgage, I do want to take a minute to talk about that, is we have an expanded suite of products, right? It's not just that we're offering EB-5 investment leverage loans, we're also providing clients the ability to access property loans, either for owner-occupied properties or for investment properties or for rental properties. Also, we've been approached by several clients, and we already have this ability to provide refinancing. So there's several clients who over the years who didn't have access to this kind of credit till we launched it, have gone ahead and made 100% down payments or made a large down payment as well. We're happy to refinance those guys as well, not just through the EB-5 investment leverage mortgage, but also through regular channels. So when you come to International Investors Mortgage LLC, we offer you multitude of options. Our approach is extremely trust-based and advisory. So what we're essentially doing is we're advising the client in what works out for their best interest. I'll give you a very short example, just to kind of build on that, is we were recently approached by a client who recently moved to the US with their, having gotten their I-566 approved last year, and then got their I-151 earlier this year. Very recently moved, had zero credit history, and approached us essentially for an EB-5 loan. We actually spoke to him. We looked at all the documentation. We said, listen, we actually truly honestly believe that you might qualify for some bit of a loan as an owner-occupied property, and hence let's use that first, and then whatever is remaining is what you should use for EB-5, because there's a cost difference between the two. So our approach is, hey, what is it that we can do for the client? What is it that's in their best interest, right? So again, just to kind of answer that question in a very simple manner, yes, the loan can be used for property mortgage, as a replacement of property mortgage as well, and can also be used for the down payment piece. So there's no restrictions.
It's good to hear that there's different options that you have at International Investors Mortgage. So this next question actually fits right into that particular discussion. It says, can I borrow against my EB-5 and then invest in the United States in the equity or real estate market? And do you have any solutions to assist with those investments?
Yeah, certainly. I think that's a great question. And so again, just to underline and highlight that, is there are no restrictions on what you can use the capital for, as long as you feel that you'll be able to justify the interest cost. And again, these are interest-only loans, the EB-5 piece. And so you should be able to benefit from whatever investments or equities you want to invest in. And as long as you feel that you're able to justify the cost to yourself, we're happy to provide those loans. I mean, there's no restrictions on that. As far as the opportunities to invest are concerned, or the solutions to invest are concerned, we certainly have people who we can refer clients to. One of the firms is LCR Wealth, which is managed by Tom Garvey. We've worked with him in the recent past. Has a phenomenal track record of decades of experience, and he'd be more than happy to advise. And there's other advisors out there as well, but we're happy to provide solutions and offer introductions as well.
Terrific, thank you. Now we have a more of a legal question, so I assume this will probably go to Jessica or Jill. From a legal perspective, is it possible, could there be restrictions based on the subscription agreement to do a loan, or is it in the PPM of the project as it relates to any restrictions for this loan?
So I don't know if this would be a question for me or for Jill. I mean, whether or not you could use the investment funds in this manner may or may not be restricted by a given PPM or subscription agreement. It's going to vary from project to project. I'm not sure if that answers the question.
Thanks.
So Jessica, I would just take that one step further. It may be that a PPM or a subscription agreement may prevent using funds this way, but that doesn't mean you're dead in the water. That means that the investor needs to then go to the issuer, the NCE, and negotiate that and explain, I need this, and see if they can do a side letter agreement or have some other way to excuse the investor for this purpose.
Terrific. As of right now, that is all the questions that we have. If there's anyone else that would like to submit a question, again, in the Q&A icon at the bottom of your screen, please, provide a question. Suresh, is there anything that you wanted to add while we've got a moment before any other questions come in?
Yeah, just at a macro level, as this panel is, focused quite a bit on EB-5, and certainly our experience has been, this is really about encouraging full economic integration into the economy for immigrant investors. And I personally philosophically believe, that is the best way to get the maximum output from these folks that are bringing tremendous amount of talents and capital to the U.S. market. It allows them to, put their entrepreneurial spirits to work best. It allows them to mitigate and manage economic risk a lot better. And anything that kind of gets those folks integrated into the system, I think is something that needs to be facilitated and fast-tracked. I don't think there's anything more useful to that end than home ownership. And so having a mortgage is in a property, in a home, I think really further incents these investors, these immigrants, to invest further into the U.S. and really have it become, their primary home and not just a second home from where they're immigrating from. So from a philosophical perspective, I just think this approach that we've developed and I assume others will follow on is just a great benefit to the market.
Terrific. Thank you, Suresh. Dinesh, there are no more questions, so The only other thing I would suggest before we wrap up the webinar is if someone has a question after this, what is the best way to get in contact with you and your team to forward the conversation?
Yeah, it's quite simple. Actually, we have websites. A website, it's called intlmortgage.com. Greg and I both are available, and I can share the email addresses. It's the first letter of my name, D, and last name GOEL at intlmortgage.com, or simply just fill out a form on the website and I'll reach out. It'll reach to our inboxes, and we'd be more than happy to respond and take it from there. We're, again, like I said, we're happy to work in full transparency, provide any information and or documentation that might help you and assist you and facilitate your conversations further with clients and with other region centers.
With that, I'll say thank you to all of the members of the panel. We appreciate your time, your expertise, and your knowledge. And for the balance, thank you so very much. And everyone have a wonderful day.
Thank you, everyone.
Thank
Thank
you.
you, everyone.
Yeah.